Let's get the spoken word now on the furniture and remodeling industries from our Chief Equity Strategist, John Blank, who joins me via Skype from the West Coast in California. John, what is the connection here between these two industries and the overall housing story as it stands?
Well, Terry, we've seen this week the 10-year U.S. Treasury rate fall from 2.75 towards 2.6 on the 10-year, and that's going to take mortgage rates down again because of the Fed taper that didn't happen. So housing's back in the spotlight. We've had some soft housing data from August, but now we're in almost October, and we need to talk about where the next leg up comes in this housing market.
Okay, so is housing going to be the next leg up in the economy as far as moving this economic recovery forward?
Terry, my view is I share the view that Tracy has in-house that we can only have the economy move forward if the housing market continues to move forward. So yes, I think the lack of a taper decision was based on the soft housing data out of the U.S., and we're going to get that 10-year down, we're going to get the mortgage rates down, and we're going to get this housing thing up on another leg.
So you are pro the furniture and remodeling industries, as I'm hearing you talk, correct?
That's correct, Terry, because what's happening that's building in this economy is we're seeing a 12% annual increase in home prices across the United States. And it's pretty consistent. It's happening in all regions. So what's that doing is taking people who are underwater, above water on home equity, and it's giving people more confidence and more wealth. And that's creating remodeling, it's buying furniture, and it's creating a real sense of confidence in what people are doing inside their homes as well as buying new homes.
All right, and what is the performance of these two industries saying about the retail industry in general?
It's saying it's very mixed, Terry. We've got a home furnishing sector here that's number 13 out of 265 on the Zacks industry ranks, but we have miscellaneous consumer discretionary almost at the bottom. So you've got your Walmarts, your Costco's who are really struggling in the face of a lot of stress in the labor market that still remains. But people who have homes, who have jobs, and who are seeing wealth build from the houses and equity markets are actually strong. So we're seeing a divergence in activity in the retail space.
All right, you got a couple of stocks you want to make people aware of in these industries. What are they?
Yeah, Terry, ticker LZD, Lazy Boy. This is a Michigan-based furniture maker and upholsterer. They are about $25 a share, and they're growing earnings over 20% a year next year. Clearly, people are building those man caves up out there with furniture. The other one is American Woodmark, AMWD. This is the premier cabinetry maker in the United States, and they are about $35 a share. Both of these are Zacks ranked number 1. Both of these are in industry number 13 out of 265, and they also are showing growth above 20% in annual terms next year. So you've got two great picks here to track the activity inside people's homes as well as the home buying itself.
Okay, that's the latest spoken word from our Chief Equity Strategist, John Blank. Joining me via Skype with John, I'm Terry Ruffalo.